Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. Today is October 10th, 2021. This is the weekend market review, premium preview. We'll go into the weekly charts of various different sectors and asset classes in the markets from a weekly perspective to give you a better sense of where we've been, where we are, and where we might be headed. Let's dive right in, starting with copper. So copper is in a very interesting symmetrical triangle right now. It's bouncing off this lower trend line over here, and then it's getting resistance on this upper trend line. So we'll see which way it goes. Now, what I do see here is we are now back above the 50 RSI level. So above this trend line would be a very bullish development. Below this trend line would be very bearish. My gut suggests that we will break out from here. This does look to me like a bullish flag formation in a symmetrical triangle within an uptrend is a very bullish consolidation pattern, and we are now above all these moving averages. Now, again, it's very tightly wound, and so I do think that there will be a directional move very soon. We'll see which way it goes. So stay very, very closely tuned to copper because I think it's going to really signal the next stage in the commodity bull market. Gold. All right, so gold is very, very interesting. So on the one hand, we broke down from the uptrend since 2018, which is not a bullish development. On the other hand, we are very much in a long-term cup and handle pattern, which is a very bullish development. So right now, when you look at it on the shorter-term time frame, we're talking about here, basically since May, this is a bullish flag. And the bullish flag has already broken above resistance, back tested here, and now we're kind of struggling to break back over the 50 RSI level. That's what I'm looking for. I didn't like that we closed back below these moving averages here, right around 1780. There's just a confluence of moving averages. So if we can break back above 1780 on a weekly closing basis and perhaps stay there a week or two, I think then this bull resumes. We probably break back above this uptrend and likely target 21, possibly 2300, which was for a while my target for the end of the year. And it's still possible we get there, but clearly the last couple of months were not as bullish as I had hoped or anticipated. All right, let's look at some of the miners. So whereas the metal was down 0.06% on the week, the junior miners, well, they were up 6.34%. That's a very bullish sign. So we just barely broke above this bullish wedge here. And so now the question is, can we break above 42.24, which is this horizontal resistance, also happens to be the trend line resistance. That would be my first sign that yes, things are improving and a rally is on its way. Also, then you've got these moving averages. You want to break above those around 46. We break above those moving averages, and then I get very bullish all of a sudden. So I think we're headed that direction. I see the MACD starting to turn. Stochastics are as oversold as you're going to get. And although we have seen them oversold for a while periods of time, so it's possible we stay down here, but I do think we're very early stages of the next leg higher of the PM bull. So start looking at names. If you haven't already acquired names on your watch list, now is the time to do so. Gold majors. Well, gold juniors, interestingly, are outperforming majors, which in and of itself is a bullish sign. We are still in kind of this bullish wedge back test. So far, so good, but bouncing off of support, both in price as well as RSI here. And let's see if there's any follow through. So what we're looking for first and foremost is a break above this trend line around 32. Then above these moving averages around 34, and then you likely have blue skies ahead. Now, clearly there's still a lot of resistance here, but those are the two main areas that I'm looking for to determine whether gold miners are ready. All right, crude oil. So crude oil is breaking out once again. However, and this is a big however, notice where momentum is right now. It's not at breakout levels. It's not in the overbought territory at 69.1. That's critical because if there's a reversal here, that means crude oil can really take a dip. So I think the easy money has been made in crude oil, and while I do think it's likely going to move higher, I just would be a little bit cautious chasing here, especially full throttle, because there's just a lot of potential for reversal with momentum creating three pretty strong negative divergences. All right, marijuana. Well, marijuana is in a very, very tightly wound, clearly defined downtrend right now, and it's not looking good. However, the one area that I will point out is this is the last point that we bottomed at in March 2020, and back here again in August of 2017. We're at that momentum point right now. So either we break lower and break down below that point, then it's extremely bearish, and then you're looking at a move towards about 650, possibly all the way down to 4, or we reverse higher here and bounce off of support levels and potentially start a new uptrend. So very interesting to watch, see what happens at these levels. All right, a commodity that really is a focus of mine right now is palladium. Palladium obviously was the hottest commodity probably of 2020, certainly the hottest metal. And then it broke down, and we saw for a while there was just negative divergence after negative divergence, and it finally broke down and went from 3,000 to 1825. But found support here at 1,800, right? Again, this 30.9 Fibonacci level is critical. And looks to me like it's about to potentially break out here of this downtrend. And if that's the case, then I think you're going to see a sharp reversal, at least to test this upper boundary here around 2,600. So as a trade, looks interesting. As a potential investment in palladium-related equities, these are the levels you want to be looking at. And the one that stands out really is Sibanye-Stillwater. That one I think is best in class miner. And it's got a very, very attractive portfolio of palladium and platinum related assets. Speaking of platinum, from a momentum standpoint is the best looking of all the metals right now. And that's saying something because it's been the worst over the last decade. I've been following it. It's already broken out of the bullish wedge. Now it's going to be testing this confluence of moving averages. If it breaks 1050, then 1125 is going to come in short order, and then I think you're looking at a major move to the upside. You notice stochastics have already broken out. MACDs are heading that way, and so platinum and palladium are the two metals that I'd be looking at very closely, particularly tied to the energy transition to electric vehicles. I think you're going to see a lot more use cases for these two metals. All right, silver. So silver still in a defined bullish wedge here, nicely bouncing so far for 3 straight weeks, but still below the 38.2 level, below this trendline resistance. So let's see what silver does next week. It needs to break above 25 here for me to get bullish. But certainly when you look at the miners, here the silver juniors, they're in a bullish flag, and they bounce very nicely off of support around 1150. If it can break above 1250 here on the weekly closing basis, would be a good sign. Above these moving averages around 14 would be a great sign. And then we'll see. So let's take it a day at a time, a week at a time. But last week was very constructive for PMs. Silver majors, similar story. Their chart is actually more nicely technically defined. You've got this rounded bottom, and you've got this very well defined handle, the bullish flag, bouncing perfectly off of support. Again, if it closes on a weekly closing basis well above that 38 level, I think at a minimum we're moving towards 40, which is a nice little trade. But again, we're looking at the break above 40 to confirm that the bottom is in. And above 40, this basically would take the move of 15 to 51. You can extend that out. I think silver majors would basically double, if not more, from here. All right, small cap energy. So small cap energy is interesting because we've got this rounded bottom. Looks to me like it wants to break out, which is a great sign. However, there is negative divergence. There's just not enough momentum right now on this move. So it can break out, and that would be fantastic for the bullish case. But also chasing here is a little risky. So what I'd rather do is watch it break out and back test, right? And then if the back test is successful here, then I would be a buyer for higher prices. Alternatively, buy the breakout and then have a stop loss around these moving averages around 650 or so, and your downside is protected as well. All right, uranium. So uranium still within a bullish flag here, within a very nicely defined uptrend, but the URA also still in a momentum downtrend, believe it or not, despite this major move since the 2020 lows. So it could not break above the 61.8 level. Bit of a shooting star in the week. So let's see if next week you have a follow through to the upside, or there's going to be further downside to test the 26 EMA around 21.21. So I don't think it's going lower than 21.21. But largely it'll be determined by the price of uranium, which, as you'll see in a second, has been taking it on the chin a bit. Major move. We basically hit our first price target around 19 at 1850 on this uranium trust, and it's been quite a sell-off since that point. Granted, on relatively lower volume, and so this is still very much a bullish wedge. The question is, are we going to break out of this wedge? Or are we going to fill this gap here above $12, perfectly back testing? And if that happens, this would be an extremely bullish buy zone for the uranium trust. What's interesting is that despite the sell-off in the uranium trust, the miners really haven't sold off all that much, and knock on wood, but I think that's a very bullish sign, an indication that the miners are expecting a sharp reversal. So if you want a conservative way to play the uranium sector, this is it. All right, biotech. Biotech's not looking good right now. That's just the bottom line. It cannot break above these moving averages, and it cannot break above this downtrend. So until it breaks that, we're not interested. But China is very interesting. Again, a lot of negative energy around China right now, their credit and so on. But here's the CNY ETF breaking out up 2.15%, back testing perfectly this downtrend and breaking above the 50 RSI level. This is extremely bullish, and MACDs are creating higher highs and higher lows. And I think China is setting up for a move well above the 50 level. So on the CNY ETF. Emerging markets, led by China, had a nice week, up 1%. Still below the downtrend, but I have a gut feeling that this is about to break higher, along with the equity move. So it's a great trade because the downside is well defined. Stop loss below 48 and above this level. If this can break this bullish descending triangle here, I think you're looking at 70, potentially 80 on the EEM. So I think you're going to get a major move to the upside in equities very, very soon. Financials, well, they're breaking higher again, breaking the downtrend, which is very bullish. And that tells me that interest rates are likely going to continue moving higher, and that the economic fundamentals globally are likely improving once again. Home construction. Well, home construction was weak and continues to be weak. However, it didn't have a nice bounce last week, 1.07%. Found support at these levels at 65, but it needs to break above the 50 RSI level here, because if this is just a back test and for lower prices, obviously it would be quite bearish. On the other hand, if this is a fake breakdown and we move higher above the 50 RSI level, then home prices, or rather home construction, will continue breaking higher after this pullback. Microcaps, they continue to consolidate above support. I think microcaps are about ready to break higher again, but they've been range bound between 135 and 155. They need to show us a direction. I think that direction will be higher, but we'll see. All right, the Nasdaq, as defined by the Qs, triple Qs, very nicely defined bullish flag price action. Very bullish hammer at the close of the week, close at the highs of the week. If we break above 362 here, I think that you're setting up for the next leg higher of this run. We are now in a technical downtrend technically, and it needs to break above this level to resume the move to the upside. A back test, an unsuccessful back test, would not be bullish. So we'll see which way it goes. Clearly, this move has shaken off a lot of the overbought conditions, which is good, but it needs to rally to confirm that the shakedown has ended. Here's another view. Here's the Nasdaq Composite. Again, very, very clearly defined wedge broke down, but we found support at the 50 RSI level. So let's see if a reversal is here. Online retail. So online retail still very much in the downtrend, but again, Online retail is an indication that perhaps society is coming back, and that is not all bad necessarily for the sector to be weak. Regional banks breaking out here is a very bullish sign. We've got the MACDs breaking, so if you want a more conservative play on the inflation trade, here regional banks, I think KRE ETF is a great way to play that sector. However, we're approaching this particular resistance line, 69.1. It's the previous breakdown point. Perhaps it breaks a little higher here, but basically, I think there's some resistance that's going to be coming up, but still very bullish price action. Russell 2000. So Russell, similar to the small caps or micro caps, are coiled. Very well defined pattern. Above 208, it's range bound. Above 235, it's bullish. Below 208, it's bearish. I think it's going to have to choose a direction in the next week or two. Which way is it going to go? S&P, so similar to the Nasdaq, it's had 5 straight weeks in negative territory, but looks to me like it's starting potential breakout. It needs to break above 4,400, and I think close there a couple weeks in a row. And I think you're heading to all-time highs once again on SPX. Semiconductors. So semiconductors are in a very well-defined uptrend. However, it needs to hold this 3130 level on the SOX index. It needs to hold 50. We're here right now. So if you're going to rally, now is the point to do so. If it breaks lower, then really you're likely testing the lower boundary here. So that would mean a lot more downside in semiconductors. Don't have strong conviction here, but I think the 50 RSI level is a good place to see a bounce at a minimum. Dry shipping continues to break out. It's been an incredible move, and again, very bullish for commodities as a whole. All right, the SPY, just another look. Yeah, so basically above 420 here is quite bullish. Below that level, I think it tests. It can break lower, but right now it is below this trend line here, and so we'll see which direction it decides to go over the next couple of weeks. All right, the transportation ETF is breaking out of its bullish wedge here. It's been one of the weakest ETFs in the market after a major run, and again, this is a sign that the cyclical trade is coming back. And whereas a lot of folks are talking about recession or further market weakness, fundamentals deteriorating, this is showing the opposite. And so this is a great trade to play right now. All right, let's look at some of the financial indicators, starting with the TNX, 10-year Treasury yield. So it's approaching pretty strong resistance here, around 69.1. So I'm not convinced that it's going to break, at least on this first attempt, around 175. I think it's going to consolidate here for a while, create a bullish flag. Eventually, it does likely break higher, but this is a very bullish long-term chart. High yield index adjusted spread. So the lower this goes, the healthier it is for general equities. We had a shooting star at resistance here. It's not breaking out in any way, and very bullish for equities. Inflation is in a bullish wedge, but it hasn't broken out here quite yet on price, but it has on momentum. So again, the inflation trade is on, and I caution anybody who wants to be on this train to miss it. All right, US dollar. Let's see what US dollar is doing. So a couple things. One is we're approaching major resistance over here, which is the previous breakdown point at 104. You extend that line all the way out, and where are we? Right over here. So if you're going to find resistance, this 94.50 level, I think, is going to be it. So we've got this double top, and you've got this trend line resistance as well coming up around 95. Stochastics are weakening right now. MACDs are not making new highs, and I think we're going to probably start rolling over on the dollar. How low it goes, I'm not going to speculate here, but the point is that would be very bullish for equities and for commodities. Volatility. So volatility continues to get pushed back at resistance here, which is a good sign for equity bulls. And again, I think equities are moving higher rather than lower. A couple of ratio charts. Consumer discretionary continues to trade well against the staples. That's a good sign for general equities. Microcaps against the S&P. We've got pushed back a little bit at the 50 RSI level, but I have a feeling this trend is going to break out relatively soon. And notice the MACDs are just about ready to go. Russell 2000, similar story, but the downtrend has ended in terms of momentum. It needs to break out above the 50. We've got a bullish flag and ran a bottom. So we've got a cup and handle. And when the small caps break out against the large caps, very bullish for equities. Here's small cap energy against crude oil. See, I mean, it's starting to, it's just still very much range bound. And until this range is broken, I'm just, the conviction trade for me is not strong. All right, let's take a look at a few of the cryptocurrencies. Bitcoin up 15% right now on the week at 55,308. So we're well on our way towards the retest of the 62,000 level. Right now, it's approaching the 61.8 level. So let's see if that resistance forms any sort of resistance, or if it clears through that, then the next level you're looking at is a 69.1 level. And that likely serves as strong resistance. I don't know if this is accurate, but that would be a super strong volume candle. Clearly, the MACDs are suggesting higher prices are ahead. And I saw someone I respect give a target of 75,000. So it's quite possible we're headed that direction. Ethereum, however, is not acting so strong, which is interesting. It's below the 61.8 level, below the trend line. And I want to see how Ethereum does, because if Ethereum rolls over, that would not be a good sign for crypto. Litecoin. So Litecoin is in a very nice bullish consolidation, bullish flag above the trend line, back tested, now above the 50 RSI level, but it needs to break $200 to go into quote bullish mode. And finally, Ripple. Ripple's breaking out here. Keep an eye on this one, because I think Ripple breaking out here takes it at least to $2, if not much higher. Guys, thank you very much for watching. Have a great week, and we'll be in touch with you with premium members, with uranium, precious metals, watch lists, and more. Take care.